Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend Sam Clement. Sam, say hello.
Hey John, how are you doing?
I am doing very well, and I hope that you're doing well.
I am. It's a good week so far. Good Memorial Day weekend, and so far so good.
So far, so good. And when I was, yeah, as you know, for Memorial Day weekend, I was over in Charleston, South Carolina, and just driving over what we used to call the Cooper River Bridge. It's now the Ravenel Bridge or something like that. I saw a bunch of container ships out there in Charleston Harbor, just huge container ships, and just got me to thinking about just what we have been hearing about in the economy right now, just about supply chain bottlenecks causing inflation. I mean, there I am looking, I don't know, a couple hundred feet above the harbor, and I'm seeing all kinds of supply. Even so, having the supply in the harbor doesn't necessarily mean that it's going to end up at the manufacturer or the retailer or the wholesaler in a timely fashion. Sam, I think we have all heard the phrase supply chain bottlenecks more over the last 3 months than we've heard in the last, well, probably in your lifetime. Your thoughts on that?
Yeah. Bottleneck and transitory are the two kind of keywords right now, and you know, I I think it's important to understand the supply chain. I think it's important to understand how the inflation measures are measured, and what they're being compared to. And I think that is a worthy point that we can talk about. And all these CPI numbers. I mean, it's generally being compared to this time last year.
Yeah.
And everyone knows where we were last year or where we were last April when the April number came out. It was awful. And, just like stocks can go down a lot quicker than they generally go up, it was also a lot quicker to shut down an economy than it is to reopen an economy. And you look towards, some of these industries that are in the measurement, things like, used cars, rental cars, things like that, reopening type plays, movie theaters, cruise industry, all that stuff. You look at where they were last year, if they were even able to be open, and compare those to where they are now. And it makes sense why there's bottlenecks in certain areas. It makes sense that, rental car industries probably didn't expect the kind of recovery that we're seeing now. It probably made sense at the time to dump half your fleet of rental cars because you didn't know if you were going to make it another 3 months. I mean, we saw Hertz go bankrupt
Yeah.
again. And so it made sense. And that's just one of the many industries. And I think the bottleneck tends to come from nobody really expected this quick of a recovery.
Well, I think
Things that made sense in last April, May to kind of keep your business afloat. Now you're kind of behind the eight ball a little bit.
Well, I think you bring up a good point in the fact that it's much easier to take capacity offline than it is to put it back online quickly enough.
Yep.
It's kind of like when you turn off when you turn on an oven, it takes some time for it to heat up. But gee whiz, you cut off the stove, and I think you get my point. It's a bad analogy, but I like to cook, and I resemble them how much I like to cook. So with that, and talking about supply chain bottlenecks, a lot of it, a lot of people have been talking about the sudden spike in consumer demand, and that's you just mentioned it, and that's certainly part of it. It's also part of it that here in the United States, I mean, some states really haven't even gotten back completely open, namely some of our larger state economies like California and New York. But then also maybe perhaps a little bit of an over reliance on a few emerging markets, if you will, to be sort of this machine shop again, if you will, for the remainder of the world. But then Sam, I want to read to you a little bit about what manufacturers are saying here in the United States about what are causing a lot of the bottlenecks, or at least what they think here in the United States, which is leading to this short-term spike of inflation. So, Sam, if you don't mind, I'm just going to read some quotes straight from yesterday's ISM, which is the Institute for Supply Management's report on business manufacturing for the month of May. You cool with that?
I'm cool with that.
All, all right. This from the computer and electronic products industry, sub-industry. Supplier performance, deliveries, quality, it's all suffering. Demand is high, and we are struggling to find employees to help us keep up. Difficulty, and this is in food, beverage, and tobacco products. Difficulty finding workers at the factory and warehouse level is not only impacting our production, but suppliers as well. Spot shortages and delays are common due to the inability to staff lines. Delays at the port continue to strain inventory levels. This and fabricated metal products, a lack of qualified candidates to fill both open office and shop positions is having a negative impact on production throughput. This and primary metals, very busy, but still experiencing labor shortages. Well, then what do you think about this? Oh, yeah, and then finally, from electrical equipment, appliances, and components, labor shortages impacting internal and supplier production. Logistics performance is terrible. So here we
It
are.
makes sense.
All, so all of these people got laid off. Yeah, I mean, all these people, was it 20 million people lost their jobs last April?
Yeah, something like that.
And so now all of a sudden their businesses want them back on the job site. And guess what? They're not showing up. And that is leading to some short term, at least that's what the Fed says, short term inflation pressures, and it's causing prices to go up. So, Sam, I'm going to ask you a question, and I want you to answer me honestly.
Okay.
Here we are, and we have all of this money floating about, all of this pandemic relief for the states that still allow it, an additional $300 from the federal government in order to assuage the pain that people are feeling, or mitigate it at least. And guess what? It's actually hurting the economy. It's actually hurting everyone else because people aren't showing up for work because they can make more sitting on their brains on the couch, which, by the way, I moved a pretty heavy couch this past weekend. And so guess what? Supply chain bottlenecks. You can't find people to make the product. You can't find people to move the product, and you can't find people to put the product on the shelf. And then you can't find people to take it from the shelf into the store. Your thoughts on that?
Yeah.
So,
I mean,
go ahead.
it's obvious. I mean, it's all obvious what's going on. And, we've talked about it before. I think that we're starting to see states canceling added unemployment benefits. And, I think those are starting to come into effect soon this month, if I'm not mistaken. And I think that's going to be a big part of it. But, it really is a perfect storm of people getting laid off, people less incentivized to go back to work, and the companies that they were laid off from also paused production, halted production, halted investment. It's a perfect storm for frictional inflation, and the transitory nature of it, or the question of transitory nature of it, is how quickly these frictions that we're experiencing can go away. Because I think if the friction goes away, the friction being people not incentivized to go back to work, it goes away a lot quicker. That's one of the biggest points of it now. I mean, take the auto industry. I mentioned used cars being a big part of the CPI, and that was going up so much because the auto companies, one, laid people off, two, paused production, and three, the semiconductor industry paused production. And so they don't have the semiconductors to put into the cars to produce new cars. And so it's all up and down the line of the supply chain, things that would cause, supply issues while demand is recovering astronomically well in some areas. And so the question is, to me, yes, it is transitory if we let it be transitory.
I like that because I was talking with a client this morning that was asking me about supply chain bottlenecks as well as inflation and how I felt about inflation. I mean, just what did we think inflation was going to do? And I kind of told him, I mean, not to sound cavalier, that I said we're just going to have to buy into what Jay Powell says. Jay Powell says this is transitory. Jay Powell says supply chain bottlenecks are causing the short-term inflationary pressures, that it should dissipate as the bottlenecks are removed. Because largely, I mean, gee whiz, I have learned through being in this industry for decades that you can't fight the Fed. And if the Fed says that the supply chain bottlenecks are causing only momentary or temporary inflation, that long-term inflation is still on the Fed's, guidelines or what have you, then unfortunately we just have to accept it until we can't accept it any longer. And so right now people, are saying, okay, this is just short term. But what happens, Sam, in your estimation, 2 to 3 quarters from now, if we're still seeing all this? You're seeing all these supply chain bottlenecks, people not coming to work. You're seeing these elevated inflation numbers. Are people going to finally say, yeah, Powell's wrong on this? And we're going to start seeing the back end of the yield curve absolutely explode. Your thoughts?
That's your last point is what I was going to hit on, and just looking at the yield curve, and it just really doesn't seem to be responding. Bears in the bull market have been obliterated for decades now, and now they're at a point where a lot of people are wondering why rates aren't ticking higher, and I think that has to be due to people expecting Jay Powell to be right and expecting this to be transitory. And so, I mean, I think that is a concern, is that the tick up in rates, or it could be a rush upwards if there's just some light bulb moment where people go, oh my gosh, this isn't going away. And that is the concern. But I think at the end of the day, at least in my opinion, I think this is something that's going to go away. I mean, I think even if you exclude the people not wanting to go back to their jobs, I mean, just what we're comparing this to. I mean, I would hope prices would be higher right now for goods in demand than they were at this time last year.
That's right.
I mean, if we weren't experiencing year over year inflation on a 1 year scale, that would be concerning to me if prices weren't higher right now, if demand wasn't higher. So once we start to get some of those better prints, that we experienced at the back half of last year, and have a better baseline to compare it to, I think that alone, even with the frictions that we mentioned still there, I think it is going to start to alleviate, and then the states will start to roll off added unemployment benefits. And I think this is something, I mean, I do believe that that's something that is mostly transitory.
Well, and Sam, you are not alone in that. And you mentioned the bond market a couple of times, both of us have. You take a look at the bond market right now, Sam. We're looking at a 10-year and 30-year Treasury securities signaling not much anything.
Yeah.
I mean, it was a long bond this morning. It was at 227, 220, let's call it 2.25. That suggests that the investors don't believe long-term inflation is a problem, which is absolutely kind of weird, because last month the CPI rose, 0.9 of a percentage point or something like that. It was the highest monthly move since 1982. The U.S. economy grew 6.4% or something like that during the first quarter of this year. Analysts, are estimating it's going to grow double-digit rates this quarter, and the long bond's at 2.25.
Yeah,
we have flooded the world with cash, both from the central banks, as well as just profligate spending by the central governments, particularly Washington, and all these supply chain bottlenecks, everything, and the long bonds at 2.25.
And I think a part of it is, just the continued escalation of production and the efficiencies that we see in our market. I mean, I think TVs is a good example of things that, they get better and better and better. And that is apparently quantified into inflationary measures, the quality of the goods and how that's increasing. And the prices of them continue to go down. And that is just obviously almost an anecdotal example. But there is a lot of goods like that as our economy grows, and as we expand and get more efficient and more productive, things like that continue to have downward pressure on prices.
Well, there you go. I think you're right. I believe that way, but only time will tell. And the thing about it is, I would say the sooner we can get the government out of the private sector's business, at least in terms of incentivizing idleness, the sooner we can get back to some semblance of normalcy, just in overall economic activity, but society as well, and then also inflation, because I do think that that's part of it. And it's you read anecdotal stories about not enough truckers out there, and that impacts prices. That's a supply chain bottleneck.
Yeah.
You hear about not enough people. They can't find enough people at the various ports to unload these cargo ships, these container ships. Well, that's a problem. That causes bottlenecks. Huge number of ships sitting, at anchor off of Long Beach in Los Angeles. Still, not as bad as they were. And then even cargo ships in Charleston Harbor wanting to be unloaded. It can't because of labor shortages. So it's going to be real interesting to see, really over the next 2 to 3 quarters, in my estimation, to see whether or not Jay Powell is accurate. I think he is. I hope he is. The bond market's telling us, it thinks that Jay Powell is telling the truth, that there isn't any significant long-term inflation concerns. However, when you're paying more for products, when you're a producer, when you're a home builder, when you're trying to construct a home and you're seeing prices go through the roof and have people such as us say that there really isn't any inflation, it's a weird, almost falling through the looking glass type of world in which we live. Your thoughts?
I think a lot of it goes back to the saying that we've mentioned at previous times and previous economic parts of this economic cycle, and that is, don't fight the Fed. I mean,
that is so true. Do not fight the Fed.
I mean, how often do investors need to have that rammed into their head before people start listening to the behemoth that they are and how impactful they are in the market? I mean, take last year, for example. They said they were going to, for all intents and purposes, backstop the corporate bond market. And without making much purchases in the corporate bond market, prices almost completely rebound within it. Their word alone of what they could do was enough to move the entire corporate bond market back to almost as if nothing was going wrong. And that's the power that they have, and that's the power that they continue to have. And that's the importance of their forecast, is because the way that they're going to develop their thesis and the actions that they're going to do are going to be based on their own forecast. So why wouldn't we take what they're doing and what they're thinking and what they're incentivizing and go off that versus, some sort of righteous investing, whether it's right or wrong, go with what they're saying.
You're absolutely right. And Sam, as you well know, we have told people all year long that the Fed has shown up to the party with a punch bowl, and we're going to continue to fill up our glasses until the Fed's ready to take it away. So all these supply chain bottlenecks, all this talk about inflation, Fed says otherwise, guess what? We're going to have to accept it. And we are accepting it to some degree. It's sort of like what you said about righteous investing. There could be just absolute rampant inflation out there. Fed says it's not there, so guess what?
It's not there.
It's not there. Even as bad as May seemed, the stock market seemed to be awful in May. Guess what? It was up 70 basis points as defined by the S&P 500. So as long as the Fed, again, has shown up to the party with the punch bowl full of cash, and as long as the Fed says there isn't any inflation, guess what? Don't fight it.
And they have essentially said that they're going to allow more inflation. I mean, we talked about it months ago when they basically, switched from a 2% hard target to, a kind of a range. And they have continuously said that they're going to let it run a little hot if need be. I mean, there's been a few members here and there saying, okay, well, if it's not as transitory, we may have to rethink it. But the headlines are about talking about, peeling back some of the policies that they put in place. Not even talking about it, but when to start talking about it. I mean, it kind of makes your head fry out thinking about these headlines, but
it's kind of like having a meeting to discuss the pre-meeting for your meeting.
Yeah, a meeting to discuss when to talk about the future meeting.
There's a lot to that. But Sam, we're getting ready to be running on a little bit long here today, and the clock is getting ready to strike 13. If you catch my drift, but I also seem to interrupt you in what was surely a very deep thought. So what were you going to say?
No, I mean, it just is what it is. The Fed they're too powerful to be going against. And, they've said they'll let it run hot time and time and time and time again. And Jay Powell has insisted upon this being transitory and insisted on letting it run a little hot, if that may be. And why fight it?
And with that, we always love to hear from you all. So by all means, please drop us a line. You can always reach us at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. As always, if you're interested in reading more, hearing more of what we have to say or how we think, you can go to oakworth.com and take a look underneath the Thought Leadership tab for all kinds of good information. Sam, you're on fire today, my friend, but I'm still going to give you one last shot in order to get something just insightful across the airwaves. Your thoughts?
Don't fight the Fed.
I actually have to agree with him today on that. No turning perspectives on that. That is the truth. Don't fight the Fed. So that's all we've got today. Y'all take care.